For years, Sam Altman spoke of the public CEO life as a nuisance, a distraction from the fundamental work of building intelligence. He kept his distance, favoring the agility of private control. That philosophy died during this series of board meetings. Today, the pace has shifted from calculated research to a high-speed sprint toward an S1 filing. The documents are piling up, draft after draft, moving through legal channels at a velocity that has the entire industry watching. This is not a change of heart. It is not an expansion of vision. It is a tactical retreat into the public markets, a desperate move to secure the capital needed to keep the doors open. Inside the office, the air is thin with the pressure of deadlines. Every hour spent on the filing is an hour taken from the labs. Altman walks the halls with the intensity of a man staring down a closing window. He knows the rules of the game have changed. To survive the next 18 months, he no longer needs to be the visionary who stays out of the spotlight. He needs to be the executive who convinces Wall Street to bankroll the future. The transition from skeptic to candidate is complete, and the gears of the IPO are already turning. Beyond the glass of the executive suite, the real engine of the company hums in remote, windowless warehouses. Tens of thousands of specialized processors draw power by the megawatt, generating heat that requires industrial-grade cooling to vent. This is the hardware backbone, the physical manifestation of a $100 billion bet. Altman stares at the burn rate reports, where the numbers climb faster than the product reach. Every new cluster of servers brings them closer to the limit of their private capital. The engineers demand more silicon to keep pace with the model training, but the accountants see the mounting utility bills and the staggering depreciation of assets. It is a precarious balance. If the infrastructure remains idle, the capital bleeds out in electricity and maintenance. If they run it at capacity, they risk a total collapse of their margins before they can reach the public markets. The question hanging over the entire operation is now stark. Is this massive, sprawling network a visionary foundation that will support the next era of computing, or is it a fiscal time bomb ticking in the dark? The hardware is already built, the power is flowing, and there is no way to turn it off without signaling failure to the investors watching from the sidelines. The undisputed lead once enjoyed by OpenAI has evaporated. 2 years ago, they defined the sector, but today, the landscape is crowded. Anthropic is moving with a velocity that demands a response. Their models are closing the gap, picking up enterprise clients who were once considered guaranteed accounts for OpenAI. The competition is no longer just about who has the smartest code, but who can prove a sustainable path to profit before the money runs out. Every update Anthropic releases acts as a pressure valve, leaking confidence from OpenAI's investors. Altman watches the industry metrics shift in real time. The boardroom sentiment has soured from excitement to a defensive calculation. They are losing the narrative of inevitable dominance. If they hesitate now, they risk being relegated to a secondary player in a market that rewards only the first mover. The urgency is visible in the way the staff moves through the halls, eyes locked on screens, tracking the latest benchmarks. They are no longer running to lead the pack. They are running to prevent being overtaken. The window for maintaining their status as the industry standard is narrowing by the day, turning every decision into a desperate attempt to solidify their market position before their competition captures the momentum. Altman shifts the mandate. Innovation is no longer the sole currency. Revenue is the new imperative. The boardroom meetings change tone, moving from model architecture to contract acquisition. They begin a systematic campaign to poach top-tier sales executives from enterprise giants, offering equity and aggressive bonuses to secure the accounts that matter. These recruiters arrive with Rolodexes full of Fortune 500 decision-makers, tasked with locking in multi-year deals before the next quarterly review. The cultural friction is immediate. Engineers who once prioritized latency and parameter counts now find themselves in briefings about customer churn and contract renewals. The directive from the top is clear. Hit the revenue targets, or lose the leverage needed for the upcoming filing. Every hire is a tactical strike, a move to prove to skeptical Wall Street analysts that the product has a viable, scalable market. They are building a sales machine in the shadow of their research lab, hoping to mask the burn rate with a surge of enterprise cash. The office layout changes, with sales teams moving into the high-traffic zones. Their constant phone calls and contract negotiations creating a new soundtrack for the company. They are no longer just selling intelligence. They are selling certainty in a format that investors demand. The race to the public market is not about capital alone. It is a fight to own the definition of artificial intelligence. Altman understands that the first firm to file their S1 gains the power to write the rulebook for the entire sector. If they reach the bell first, they set the valuation metrics and dictate how the market calculates their worth. If they wait, they leave the door wide open for Anthropic to claim that throne. Anthropic could prove a leaner, more profitable path, forcing OpenAI to defend a model that Wall Street might then label obsolete. The office is quiet, but the air is thin. Draft pages of the S1 filing pile up on desks, each line a deliberate attempt to frame the company as an unstoppable force. They are not just preparing financial disclosures. They are constructing a narrative intended to lock in their status as the industry standard. Every hour spent editing the prospectus is a tactical move to preempt the competition. They must force the market to bet on the future they have built before anyone else can offer a different vision. The goal is total dominance of the industry narrative, ensuring that when the public finally buys in, they do so on OpenAI's terms, not their rivals. The boardroom doors remain shut, but the friction inside has become impossible to ignore. At the head of the table, the demand is singular. Show a path to profitability before the next fiscal quarter. Across from the investors, the engineering leads push back with a singular, non-negotiable request. More silicon. The discrepancy is no longer theoretical. It is a war for the company's soul. One investor slams a spreadsheet onto the mahogany, pointing to the burn rate that threatens their solvency. "We cannot scale into a black hole," he states. An engineer stands, leaning into the table, his knuckles white. "If we stop the compute now, the models stagnate. If the models stagnate, we lose the lead, and the revenue disappears anyway." The silence that follows is heavy. It is a binary choice: slash the research budget to satisfy Wall Street, or double down on hardware and risk a total capital collapse. Altman watches the divide widen. The engineers are building a future that requires infinite power. The investors are demanding a business model that requires immediate restraint. There is no middle ground left. The room vibrates with the weight of the impasse. Every minute spent debating is a minute where the competition gains ground. Yet no one is willing to yield the strategy they have built their reputation upon. Altman stood by the window, watching the city lights flicker below. The boardroom noise had faded, but the arithmetic remained. It was a simple, brutal equation. Every month of operation required an injection of capital that the current revenue could not cover. He walked to his desk, running a hand over the stack of S1 drafts. If the public markets looked at these numbers and saw only a bottomless pit, the reaction would be immediate. The lifeline of venture funding was a luxury that would vanish the moment they filed. He visualized the mechanism. A rejection from Wall Street meant the share price would crater, the credit lines would be pulled, and the data center power would be cut within 48 hours. The scale of their ambition was precisely what threatened to destroy them. It was a race against the depletion of their own bank account. He knew that if the market sensed weakness, the capital flow would dry up overnight, leaving them with nothing but empty servers and broken promises. There was no margin for error left in the system. The next filing had to be perfect, or the entire operation would dissolve into a fiscal ghost story before the first bell even rang. Altman turned from the window and reached for the draft on his desk. The IPO was no longer an exit. It was a barricade. He picked up the pen and marked the timeline for the final submission. If they waited, the scrutiny would grow. If they moved now, they forced the market to accept their terms. He signaled the team to accelerate the S1 filing. The goal was to establish a valuation before the auditors could drill into the burn rate. By locking in the price, they turned their scale into an impenetrable defense. It was a calculated trap for Wall Street. The public would see the revenue, the growth, and the sheer volume of compute, but they would have to bet on the future before the current margins were fully laid bare. Altman watched the documents move out of his office and toward the lawyers. Every page finalized was a stone added to the wall. He was not just seeking capital. He was securing a position of dominance that would be impossible to retract. The race was now a matter of timing. They had to go public while the narrative of innovation still outweighed the reality of the fiscal drain. The defensive wall was rising, and with it, the path to leadership was set in stone. The narrative of breakthrough intelligence faded, replaced by the cold, mechanical reality of the next 18 months. Altman shifted his focus from the internal logic of the models to the external pressure of the burn rate. This was no longer a battle of algorithms. It was a contest of sheer financial endurance. Every server rack in the facility consumed electricity like a furnace, and every watt was a drain on their remaining capital. The competition had shifted into a brutal, capital-intensive grind where the side with the deepest pockets would outlast the other. He tracked the resource allocation daily. Engineers were redirected from research to scaling infrastructure, forced to optimize for cost rather than capability. The goal was simple: keep the lights on until the market could be forced to pivot. He watched the data flow, knowing that intelligence was now secondary to the ability to sustain the operational load. If they could survive the next year and a half of high-pressure utility costs, they would cross the finish line. If the cash drained faster than the revenue climbed, the entire project would stall. It was a war of attrition played out in spreadsheets and utility bills, with the survival of the firm hanging on the ability to outspend the competition until the final bell. The S1 draft sat on the mahogany table, thick with pages of projected growth and operational costs. Every revenue milestone checked off was a step closer to the public market. Altman reviewed the final summary, noting the scale they had built and the massive infrastructure demands that now defined their reality. There was no room for hesitation. The lawyers stood by for the final signature. Outside, the market waited, and the countdown to the opening bell began in earnest. Every decision made in the last 2 years had led to this specific sequence of events. They would force the market to bet on the future they had created. Regardless of the fiscal drain, the choice was made. The path was set. He signed the document, finalizing the commitment to go public before the margins could be fully scrutinized. The machinery of the IPO was in motion, and it would not stop. The doors to the private era were closing, and the public stage awaited. With the ink dry, there was no turning back. The goal was simple: scale at all costs, hit the bell, and lead the market into the new reality they had forced into existence. The race was down to the final seconds,